The markets are moving with more velocity and ferocity than the last movement. We're looking for insights on how to trade and understand the market indices, as well as the best blue chip shares to pick up in this market environment. Gary Glover is guiding us through. Good morning, Gary. How are you?
I'm great, Chris.
Well,
I like the intro there. Yeah, velocity and ferocity. Definitely feels like the type of market, actually. Yeah.
Well, credit to credit where it's due. This is something you've picked up, and if you look at the portfolio, you've been adding the B-bus and the SNAS, waiting for these short movements to unfold and ferocious falls. How's that part of the portfolio panning out?
Yeah, nothing really sort of changed around our view there, really. Sort of not much new to add. I mean, it's really going to script, really. We've seen some weakness. We're starting to see the NASDAQ, S&P now going to new lows. I just thought I'd sort of drill in a little bit, look at our sort of downward channels there, just sort of see, I think what it'll do is it'll probably follow this sort of downward channel for a while, and then eventually it'll overshoot, a bit like, markets can overshoot on the top side. I think it'll probably overshoot eventually on the bottom side to wash this move out. But I still expect to see a little bit of some short, B-wave rallies there. But I was looking through the other day. I can't remember what it was. It might have been the NASDAQ there. I think it's had like a 2-day rally, a 1-day rally, and a 1-day rally recently. So it's not going back to back too strong. So it's it's in a pretty weak position there. So it just looks pretty negative to me. Look, it'll come down the bottom of the channel, maybe try and rally again. But yeah, I think the trend is pretty strong down here. Still seeing stronger volume on the down days. I think I saw someone talking about those 3 sort of heavy distribution days down in a row there recently as well, which are already following some other distribution days. So candlestick guys might call it the 3 black crows and stuff as well, but just some heavier down days as well. So yeah, still looks pretty bearish, but look, it will be messy. Thought this would be pretty volatile sort of decline here. That's the nature of bear markets all the time.
Well, your report talks about it being the riskiest quarter for 2022. If we have a look at that NASDAQ chart, how do you come to that conclusion or that insight that it's the riskiest quarter?
Yeah, look, if we didn't sort of watch last week's video, I'd go back and have a serious look at that again. I'd probably, I'd watch that twice personally if I hadn't seen it before. I don't understand the cycles there, but we've really got this midterm year is just one of those years that markets tend to sort of habitually sort of wash out into. And for me, we've got a confluence of strong sell signals here, just some fundamental triggers. So you got massive inflation here across the world. There, you got supply chain issues. Got interest rates about to move higher. Central banks taking money out of the system, out of the system now. It's a perfect storm here, really, for a bit of a sell-off here. Growth's already been hit here. Most people don't understand that when growth gets hit, it really gets hit. It's not, doesn't have a sort of mild, it doesn't have a sort of mild pullback. Has a pretty aggressive pullback there, and the sort of percentages that you see in these big growth crunches, they're big moves. They're not small moves. So just go and put a NASDAQ or an S&P on a monthly chart. Just look at the big picture there. Don't it's easy to sort of get wrapped up in the daily sometime, but go and have a look at the longer term profiles there. It's pretty negative here. We're just not seeing too much strength there. We're sort of seeing 1 or 2 days up and then getting trolleyed basically back down again. Some big down days as well. So I just looks pretty bearish to me. I know there'll be a few little bounces here and there, but this is just typical bear market behaviour. It's just bang on. It's just following. It's similar to that 2000 I know I've kept harping on about that for the last 6 months, but so many similarities to that period. It's not funny.
Well, that's probably a good point, because you're talking about the NASDAQ and in history, how much it's really fallen over when growth gets crunched. And you've got bearish positions on both the NASDAQ and the S&P 500. Are you seeing a similar sort of thing? It's that theme still playing out. Is there any change to the thesis for the S&P 500, or it's the same thing that you just mentioned with the NASDAQ and they're only 1 to 2 day rallies at best?
Yeah, that's right. I think, look, you'll get a few little, if you go back and look at that 2002 period, I think we covered that maybe 3 or 4 weeks ago, some charts there. We definitely saw quite a few rallies there. I don't think it's going to be quite like that period because that was quite a long bear market. This is like a midterm year, so I expect it to be a little bit more, this sell-off to be a little bit more aggressive and a little bit quicker. And if you look at, we talked about the Dow Jones there last week, how the average rally midterm year is like 49% off the October lows in the midterm year to the following year. So that sort of tells you the sort of crazy bounces that have come out of these midterm years. So that's why I think it might be, I don't see this being like a 2-year bear market phase. I think this could get, the cycles are telling us could be an aggressive sell-off year. And there's definitely a bit of there's definitely lots of catalysts there which could spook the market here in the short term here. So I'd just be very cautious here right now.
Well, that's the US markets, and you've mentioned a fair few times that the Australian market has been resilient, and you'd expected it to be resilient. As you said, you've been harping on for it for 6 months.
Yeah,
it has played out that way. Would you expect to see the Aussie market also be pulled down with that? And you've got a target here on this chart we've just got on screen. Are you expecting the Aussie to get pulled down towards that level too?
Yeah, so similar to that 2002 period, the Aussie market obviously outperformed and was very resilient. And while the US market was making lower highs, the Aussie market actually made marginal new highs. So we've sort of done that here as well. I mean, quite resilient. So I just think, we saw, so I think this will, gone slightly above, didn't take out the high, but took out the first lower high there, but gone to a marginal new high there. So that, when I see a marginal new high, it usually means it'll go to a marginal new low that follows. That's sort of the theory around this sort of, it doesn't always happen, but it happens sort of probably 3/4 of the time, sort of moves that happens here. So I just, I think that's going to likely move down here. And if we look at our volume profile, that's the one thing that I see in the market here. So we talked about the rally sort of into that high. The last 2 or 3 weeks into the high, we saw a massive decline in volume. So basically, we just saw less and less commitment in our in the market as we got higher and higher. So just basically means we're sort of running out of people participating in that rally. And then we've had a sell down here, and the volumes picked up. So the funny thing is here, we've actually, the down moves, the down periods, which are sort of highlighted here, those have all been heavier traded. So actually we've been a little bit heavier handed actually on the sell-offs here. So even again, the last 2 weeks again here at the high was a good volume week, and then last week was a good volume week as well. So I still think this looks pretty negative to me. So the volume profile is again sort of showing some weakness here. So again, I just it's not a big move for us. To come back to 7.5, 7.6 there, come back to maybe 6.8. It's in terms of sort of type of move I think the US might have, it'll still be quite resilient there. So, and it would probably quite in line with that sort of 2002 period as well. So I just think you'll see a little bit of a cooling here as well.
Well, an extension of NASDAQ that you were talking about before is on the growth side of things, saying that can really get hit, and when it does, it gets hit really hard. The Shanghai can be sort of an extension of growth or used as a proxy for many things, but it can be sort of very volatile, more like the NASDAQ. What are you seeing happening on the Shanghai at the moment?
Yeah, so it's interesting. It's sort of the Shanghai has often run its own race. So it doesn't actually the Aussie market, and European markets, they tend to follow the US markets. Obviously, they mightn't be as strong on the upside or mightn't be as weak on the downside, but they tend to sort of follow the same sort of cycles there. Just basically the size of those cycles might vary. Whereas the Shanghai has often run its own race, a bit like quite a few of the Asian markets here have sort of had boom and bust cycles, while other periods have been more normal. So I've just noticed here that, I've looked at this sort of long-term support line a couple of times there and seen some decent bounces, rallies from there. So just notice here that that the Shanghai is coming back. It's gotten near that sort of long-term support line, and so at the moment, no one likes Chinese equities. There's obviously the sentiment, China-Australia relations is probably all-time low. We've got obviously Chinese property markets have obviously had a few issues as well over there, and there's been a lot of restrictions. Obviously, the Chinese government have brought about through different industries, and that's definitely caused some panic and some lows in their market there. So they haven't really shot to the upside like a lot of other markets there. So they're sort of probably from looking at the sort of PEs and stuff there where they normally trade at, they're sort of probably trading down the kind of lower end here. So just interesting here that we're sort of technically down the bottom of the range here for them. So just sort of it's definitely sort of wanting to look at. There's a couple of decent sort of Chinese ETFs that might be looking at, but if we see some support at that long-term sort of trend line, the support line there, definitely worth sort of looking at that. I know sort of you get your tech stocks in the Chinese market there, but this is obviously the broader sort of indice there. But I just think this might find a low before US finds a low, and they've definitely had a few more issues there recently. So at the moment, no one's looking at this market. I don't think anyone's actually interested in Chinese equities, and maybe that's the time to be looking at when no one else is.
I remember I just read a report from Colonel Nelson at Platinum, comments on his AGM, and their fund managers were talking about private equity has really looked to pull out, and investment banking has already pulled out of allocating capital to China. So there's already been withdrawal because fear of sanctions as a flow on from Russia.
Yeah.
So that's definitely the word on the street with investment banking side of things, is it's harder to deploy capital there or convince Westerners to do it. And as you're saying, it's out of favour, so that could be the time to turn.
It just reminds me of the whole like coal market like a year ago. It's the same sort of world's gone green. Investment managers are now become like half of them will become ethical based, so they can't invest in businesses that are not that are environmentally unfriendly. So everyone was telling us 6 months, a year ago, if we're not investing in coal, we should stay away from that asset. So no one, everyone hated that sector, and there was no reason to go near it. Chinese equities feels exactly like the same scenario here right now. There's no reason to go near it. No one who's looking at it. Everyone's telling us to stay away from it. So just a lot of similarities there with what look what's happened to coal. So I just say it's just interesting maybe time here for Chinese equities. I don't have a position here, but I'll be watching this, doing a bit more analysis on this pretty closely. I just think it's this might find a low before the US market does here.
That'll be an interesting one to unfold, and definitely one to look for from a trading perspective. The trading shares that you've picked up this week, you've got some blue chip names, which is always great to see. The liquidity is normally better and easier to trade, as well as the possibility of options. We've got Wesfarmers here and showing a 50% retracement, and it seems to be sort of bouncing along that line. Is this what's it spelling out to you?
Yeah, so just showing a little bit of relative strength there. Sort of look, the last low, there was pretty solid volumes there, and then we sort of pulled back, and we didn't go to a new low. So we sort of rallied that. What's up? 1, 2, 3, 4 weeks, and then we've gone 1, 2, 3, 4 weeks down and didn't go to a new low. So it's the first time it sort of showed a little bit of resilience there. Volumes are still sort of modest there off that high low there, so it's still sort of. But yeah, just sort of think, there's the one thing I've noticed there is that the staples do tend to hold up better when the market goes through a bit of a bearish phase here. And this has already had a pretty decent decline here. There's a few key, we've got the old high back there as well, around 46. We've got the 50% retracement there, just under 47 there. So we've just got a couple of big technical levels there, and then just the fact that we're showing a bit of resilience there is sort of showing a bit of strength there. So yeah, this could be at a low here, or to me, if it does go any lower, I think it's only going to be going marginally lower here. So this is sort of one that we should be probably looking at here at the moment, just looking at the the relative strength that it's sort of showing currently.
That's a good one to watch. And the other one is AMP. Now, it has been down and out for a long time. You've picked it up a few times as a potential trade in the last few weeks and saying that you've been watching it trawling out that bottom, false breaks and the like. What's done now? What's happened with AMP?
Yeah, so it just kind of reminds me of that sort of AGL, had sort of been in that really long-standing downtrend there. It's had a few rallies there, but never been able to break, hasn't broken too many swing highs along the way here. But there was some okay volume at the last couple of lows there. So we saw a little bit of participation taking place at those lows, but just looks like now we've sort of broken up out of that range there. And look, I don't know if I trust this or not, Chris, but it's but technically we're sort of definitely seen a bit of a bullish move here. We've taken out a swing high, broken out of that sort of descending wedge there. And yeah, this could be the start of a move here. There's obviously been a couple of things that have happened with AMP. I've sold a couple of assets there. So what that means is that they've got a reasonable price for those, and being able to pay some debt down and potentially being able to hand some money back to shareholders as well. So there's actually just means the balance sheet's a little bit less stretched than it has been. And shareholders actually might get a little reward, which they haven't been rewarded at all for a long time in this stock. So just a few little positive things happening with the stock, and the price action is sort of getting positive as well. So just interesting there. I don't know. It's not sure if I trust it here, but it's but yeah, the technical picture is definitely looking a little bit more favourable here. So it's just sort of one that seems to be just getting some positive momentum there. It's odd how obviously the market looks pretty weak here, but this one's sort of turning up in the face of it. So, it doesn't look too bad from the technical picture.
Right. Well, there's some good trades to take into the week, and another one is IAG on the insurance side of things. So financial, but a bit different to AMP. It's also been down and trawling below it. We can see on the chart here, had sort of that sideways congestion, but they've dropped below it. What's happening down here where they've dropped below that congestion that's caught your attention?
Yeah, so we got our kind of false break there at the low there, which we had there, probably 6-7 weeks ago, and we saw some reasonable volume at the lows there. So it looked like a bit of accumulation there. We just happen to have a few extra bad storms in there, which has sort of kept a handbrake on the stock here. But oftentimes, when things are there sort of worse there for insurers there, that's oftentimes the place to be sort of having a look at them. So just noticed since then, we're sort of, after getting that false break there, we've now got a first high low there. Drill into the daily there. There's a little bit of a BCP pattern as well, sort of setting up there, just each correction getting sort of narrower and narrower. So saw some reasonable volume come in there late last week. So, okay, this is actually starting to show signs of strength there. The thing about insurers is obviously, with the bond yields going up, there's a lot of cash held by the insurers there, and normally that cash held is generating no return because it's basically historically rates have been so low. But now with rates starting to move up here, bond yields higher, that extra return there is quite substantial for insurers. Actually, really does help their bottom line. So obviously, all these storms don't help them, but yeah, there's just potentially sort of, a base getting built here. There's some signs there that looks okay. So I've just sort of, I've looked at a small position here with a sort of small top there, try to keep my stop around that sort of 5% level. Don't really want to risk too much here, keep position size kind of a bit smallish. But yeah, I think this looks quite good here actually. So so one of the few trades that I like, to be honest, I look for the 300 every weekend. There wasn't too much to like in the 300 there, so I almost struggled to find those three, to be honest, through.
It's slim pickings in the market, but with IAG, you're saying that the interest rates are moving in their favour, which for the actuaries and the business models that they put forward, that's a great tailwind for them. And then does it also play into their favour that at times after catastrophic events, they can actually have a series of premium increases that can unfold for them?
Yeah, exactly. So much as they take a bit of a battering here at the time, obviously the share price is taking a bit of a battering as well. But then you're right, basically these type of events there. We've got inflationary pressures across the board for all other matters. So, but yeah, these type of events do generally sort of are a catalyst for an increase in premiums there as well. So, but so people probably take play the long game here a little bit. So insurers do have their risk of these type of events happening. We've definitely had a lot more of them happening recently, particularly in New South Wales and Queensland. But price is kind of reflecting that as well. So I think there's some upside potential here for the stock.
Well, they're the trades this week, as you said, slim pickings in the 300. And if anyone wants to contact you to understand more of these trades, the timing of your short positions that you're putting on BBUS and SNAS, then they can use the phone number and the email on screen. Is that right, Gary?
Yeah, that's perfect. Thank you, Chris.
Very good. Thank you, Gary Glover from Novus Capital.